Today is an exciting episode, everybody. We're talking about my favorite stock, which is STOR Capital, ticker symbol STOR. We're going to be talking about it from three different perspectives. First, financially, from their own website. We're going to go through some of their financial documents. Secondly, we're going to talk about current news and events. So we'll look at a few articles on recent events with STOR. And lastly, we'll look at my portfolio and any recent activity I've had with STOR. But first, if you want a channel that's going to help you speed up your journey to financial freedom through dividend growth investing, Stately Investing is the place for you. So hit that like button, hit that subscribe button, and turn on notifications, and let's get started. All right, so let's get started and look at what STOR Capital does. So STOR stands for Single Tenant Operational Real Estate. STOR is basically a landlord in that they manage net lease real estate, and so they're a REIT. And REITs typically have to pay out most of their cash flow in dividends, right? So people like to, who follow dividend growth investing or dividend strategy, will likely have some REITs in their portfolio because REITs pay out a great dividend. You can see this is their stock sheet here. This price is a little bit behind what STOR is currently at, but at the time it was a 5.6% yield, which is pretty great. And they pay out quarterly. So you can see that STOR is showing how their kind of net income has grown, their dividend has grown over the years, and AFFO has grown over the years. And so this is just a quick overview of their overall growth, which is great. We like to see that. More importantly, you can see the kind of businesses they're in, right? So there are different asset classes and the breakout of those. So service, retail, and manufacturing. I think, all of this has been affected by COVID-19. And so we've seen some dips in these areas, and that's why STOR's overall stock prices dropped quite a bit and has provided some great opportunities to purchase. I think as we go through the financials, you'll see why I'm still positive on STOR and why I think it's just it's going to rebound even in potentially a down economy of the future. I think STOR is positioned in is well enough positioned to handle a down economy. But you can see they handle things like restaurants, health clubs, movie theaters, right? All three of those things would be potentially down, but they also handle early childhood education. So, alternative education sites, which might be peaking, given the recent news. And then retail, they're fairly limited in retail, so 18%. And even all of these things, I think these are mostly things that people will continue to buy. So they're not, necessarily the stores that you see in a regular mall, right? These are independent stores, so there's only one tenant in each of their stores. And then in manufacturing, they handle, a wide variety of types of manufacturing. And so overall, like they said, they have a strong business model. So they are collecting rents. Their rents did dip quite a bit, or not quite a bit, but they did drop during coronavirus, the peak of coronavirus in the U.S. And so I think, people were worried again about the impacts that COVID would have on their stock, and that's why their prices dropped so significantly. And we'll get to that in a news article. But let's jump over to their financials and understand more about how their business works. All right, so if we look at the balance sheet here, actually, let me zoom in so you guys can see a little clearer. If we look at their balance sheet, you can see that they are mostly real estate investments, right? That's what most of their assets are, is the actual land and the buildings that they own. And then most of their cash flow is actually coming from the rent that they get from those tenants who occupy those buildings. So overall, their land, it shows kind of they've been growing in their land over the years. They've been purchasing more and more. Same thing with buildings, right? And getting those buildings up. Intangible lease assets is fairly small. That varies from year to year. But overall, their total real estate investments, if you sum up those three things, have been growing each year. And you can see even in Q2 through Q2 of 2020, that number was up for the year. Obviously there's depreciation on those assets, but overall the total amount has been growing, and that's something that you like to see. So then I think, their cash is the other thing you want to look at, and we'll jump over to the cash flow statement here in a minute. But you can see that their cash and cash equivalents have been doing fairly well, right? They have been growing that mostly, right? There probably was a big investment during this year. And then through Q2 of 2020, they actually have quite a bit of cash. I think that's because they raised some credit. They purchased some credit, basically got a line of credit from. You can see it here. Yep, the 600,000. So that's the difference between these two numbers. Is they took out a line of credit. Obviously they wanted to shore up their resources during COVID to make sure they had enough money. But overall, they're looking pretty good as far as total assets, liability. This is, I think for me, the most important section of the balance sheet is to understand their liabilities and how much debt they have. So obviously they've taken on this line of credit, and then they have some unsecured notes and terms loans payable. Basically, these are the loans that they need to pay back, and then non-recourse debt obligations of consolidated special purpose entities. That's another way of saying money that they owe someone, right? So these two really are showing how much they owe in loans. Actually, all three of these, and you can see that it's grown a little bit, right? So their total liabilities has gone up, but overall, it's about half of what their total assets are, or even better in some cases. So overall, their liability is a little bit high, but I think overall they are in a good position because they have such great assets. And to pay down these liabilities, they are taking in cash from their tenants, right? So it's not like they just have these assets and the assets are what producing is what's producing their income. They actually have tenants who are generating cash flow. So we'll take a look. Why don't we jump over to the cash flow statement and understand what's going on here? So overall, you can see that their net income, again, these are in thousands, right? So these numbers are equivalent to like 284 million. So you can see, okay, here's their net income, basically from all of their operations and getting money in from those clients or tenants, I should say. And then here are the adjustments to net income, right? So you have depreciation and amortization, and basically you pull out all of these things and you can see that their net cash is this value right here. And so because they have large amounts of depreciation, they can kind of add to that net income there. And that total is, 458 million through 2019. And then it's sitting around 184 million through half of 2020. So overall, you can see their investment activity, and then financing activity. So just borrowing and repayments, etc. Overall, their cash flow, where it's going, there's a line in here around dividends, I believe, as well. You can see that there's a dividend payout somewhere in here as well. And overall, you can just see how their cash flow is going. Cash equivalents, and restricted cash end of period. You can see this is basically the number that we're caring about, and it's growing, right? So it's gone up, and then this line of credit is kind of artificially inflating this number. So it's been kind of stable from 2019 through half of 2020. So in summary, I think STOR is in a pretty decent financial position. We're going to jump into some recent articles to see how COVID has affected them and whether or not people are, suggesting that you buy their or purchase their stock. So why don't we jump over to those articles now? So this article by Nicholas Ward on Seeking Alpha, he looks at dividend kings and looks at just dividend ideas and investments in general. So overall, he did a 5-part series on REITs that he's been buying. STOR Capital was part 4. And you can see basically from the summary here, it kind of sums it up perfectly. So he was worried about dividend safety, but the company actually increased its dividend by 2.5%. So that's pretty good indicator that they feel confident about their abilities to pay out that dividend, right? If they're increasing it during COVID, they really have a focus on their dividend and making sure that it's growing year over year. And so STOR Capital has done a good job of reassuring investors that they will continue to pay out that dividend. This is a common statement that I see here, right? So STOR Capital's rent collection actually lagged realty income, but STOR shares are much cheaper, and he likes the value that they offer. I'm in 100% agreement with that, right? So I actually own realty income as well. It's one of the bigger assets in my portfolio, but I own even more STOR because I like the value, right? So I think they are undervalued, even still currently, after somewhat of a recovery, and that they are cheaper, right? So I think there's more there's more investment opportunity and bigger yields to be had. While Realty Income has more stable tenants, STOR has some of the slightly riskier tenants. I think STOR provides such a great value. So why don't we jump down in the article to actually see what's going on? All right, so in the middle of the article here, we scroll down a little bit, you can see that the difference between Realty Income and STOR. So Realty Income focuses on, as he puts it, investment grade tenants in recent years, whereas STOR has focused on slightly lower quality tenants while still achieving strong investment grade metrics in each one of their buildings. So in other words, they focus on value, and they focus on properties where they think or tenants where they think they will still be able to achieve a high payment rate, right? They're still going to receive money from these tenants, but they might be a better value. They may not be of STOR or of Realty Income quality. They might be slightly below that, and so they might be a slightly riskier tenant per se, but in reality, they're still going to get paid from those tenants. So I think that strategy has hasn't necessarily performed as well during COVID-19. So yeah, you can see it right here. Their middle market approach has underperformed in 2020 due to COVID-19. But overall, I think they are going to recover, right? So once we return to a somewhat normal world, I think STOR's stock is positioned to recover back to at least the positions where it was, and then potentially even higher than that, making it a great value. So why don't we jump over to another article so you can understand a little more about what happened when the COVID-19 peak really started and the lockdown started. All right, so in this article by Julian Lin, they talk about STOR Capital, there was blood in the streets, right? So this is in March, and the summary does a good summary of exactly what happened. So the best time to buy stocks is when no one wants to buy stocks, obviously, right? You can, we'll put a link to my video on buying things on sale and why you should buy things when nobody else wants to buy them. We'll put the link up top. But also, STOR has outperformed the broader market since reaching that low in March. Their rent collection has improved dramatically as the tenants have reopened, right? So the tenants that they have didn't go out of business. They were able to reopen those locations, and the rent has been pouring back in. Obviously, STOR has a good yield at its current prices, and Julian sees a good rate of return for any shares that they buy with over 30% upside. So really, not too much more to explain in this. There is a good kind of chart here to see where STOR dropped. You can see where it was and where it dropped to March, and how it's slowly been recovering over time, right? And at the time of this article, it was at $27. I think it's dropping back down to $25 this week, or close to it. And basically what I've been doing is slowly just buying more and more. So I think I purchased quite a bit in this section, right? We'll get into my portfolio in a minute. We can see exactly what my average cost is in my Robinhood account. But overall, I've been buying throughout this time period. STOR just, I think, is a great stock in general. That's why we call it my favorite stock. And so obviously I've just been dollar cost averaging even as it goes up, because I think there is potential to return to where it was in the past. So why don't we look at one more article and then we'll jump into my portfolio. All right, and this last article is from Cody's Dividends. I actually posted this article on my Twitter. If you aren't following me on Twitter, you should be. It's at InvestStately. That is my Twitter handle. Feel free to follow me there. But Cody's Dividends always has good articles, and they were talking about my favorite stocks, so I made sure to post that article. But again, the summary here kind of gives you an idea of what this article is about. They talk about, the dividend increase. Obviously, we talked about that a little bit earlier in the video. And the second bullet point also gives you a good idea of, or another statistic on how STOR Capital has been doing even throughout the COVID experience. So their diluted adjusted funds from operations per share has only declined by 5.1% year over year, which is a great, pretty good statistic given the amount of store closures that were happening during lockdown across the nation. And then you can see, just because of its yield, it makes it a pretty good investment over time. And so this article just goes into the strength of STOR, right, and how its dividend is still safe and there is potential for growth. This goes through the the AFFO numbers here. You can read the article again if you want more details there, and you can see the portfolio, which we also looked at, right? So similar to what we've been doing, we've been looking at the overall portfolio mix and whether or not we think it's a stable investment, and whether or not they can recover and see that growth potential again at their current levels. So overall, I would recommend you reading this article if you want further details. But why don't we jump over into my portfolio to see exactly what I've been doing with Store Capital. All right, so we're in my Robinhood portfolio here. You can see that Store makes up the biggest portion of my portfolio. We'll jump into Store, and you can see what my average cost is, right? So my average cost is $20.93. It was even lower, but like I said, I continue to buy. Why don't we look at the 1 year view? You can see, right, as the crash was happening here and then as the recovery was coming back up. So I think the numbers, it was in the $37, even the $40 range. We're currently at $26.75. I think we can get back to those levels. You can see my return has been pretty good, right? So almost 30% here on my total return. My market value is at $7,098 currently, and I have about 262 shares. So overall, this makes up a third of my Robinhood portfolio. Obviously, again, it's my favorite stock, so that's the reason why. I think we can go to my account history. Why don't we shift over to there to see kind of dividend payouts and anything else I've been doing with Store in this account. So we're going to start from the bottom here. This is when I started to reinvest in my Robinhood account, and my first real investments were in Store and Realty Income. You can see that my first dividend paid out recently is from Store Capital at $26.25. And if we scroll up, the next one was at $48.65. And this is where I had turned on reinvestment. So it reinvests only directly into that stock, as unlike M1 that actually reallocates according to my portfolio. But you can see that, not quite double, but pretty close, right? Double. And obviously I've been adding more shares here, so that's why this has been going up. But then also they did raise their dividend. So then you can see, okay, we're at $48 here. And then if we scroll up, you can see most recently $93, right? So we've had payouts for 3 quarters here. We're almost up to $100 a quarter here, and that is all reinvested. And if you think of that as, let's look at that, you can see, hey, so $93.04 reinvested. That was with 258 shares at the time, and it basically purchased me almost another 4 shares of Store Capital. So that's, again, why I encourage everybody to reinvest their dividends. It's just going to end up increasing the amount of shares that you own without really doing any work. And if you don't need that money at the time, I would highly suggest you reinvest it. So why don't we roll over to my M1 finance account and see what Store is doing there. All right, so we're in my M1 account, and again, we're going to start from the bottom. So you can see in February is when I started investing in Store. You can see the kind of small purchases here, $14 here, $1 here, $10 here, $50 here. And you can see this first dividend payout on April 15th, $2.67. And I just continue to buy throughout. There were some bigger buys in July, but that didn't count towards this July dividend. So there's a $7.93 payout of dividends. And look, I continue to buy. If you notice a trend here, I just keep continuing to buy. And my latest dividend was $17.95, right? So this just continues to go up. I continue to buy pretty much weekly. There might be cases where I'm adding more funds, and basically as that price decreases, M1 purchases more of it, which I love about the automated features of M1. And as it kind of stabilizes, it still buys because I still need to keep certain percentages, and I have Store at a pretty high percentage. So in summary, let's just recap what we're talking about here with Store today. I think the financials from Store make a lot of sense, right? I think REITs in general, usually if they have good financials, if they aren't bogged down with debt and they're able to increase their dividend, then you are in a pretty good shape. You have to look at their asset class of their tenants and make sure that they have decent tenants who will be able to pay the company and the corporation over time. And the nice thing about Store is that they really are single occupants occupancy tenants, and so they are evaluating each business individually, which is a good thing. And so overall, I think the financials for STOR are stable, despite coronavirus and COVID. And then I think with current news and events, you can see that people just think it's a great opportunity to buy STOR, right? They were really hit hard by COVID, or at least their stock price was hit harder by COVID than reality, right? So I think, there was some exaggeration about STOR and what value it retained. And then lastly, in my portfolio, you've seen just the dividend increases. And the most important thing I stress there is the dividend reinvestment. So overall, those three things make me, happy to own STOR, why it's my favorite stock. Let me know in the comments if you agree, disagree. What do you think about STOR versus Realty Income? I'd love to get your feedback on all of those things. Again, feel free to hit the like button if you want and hit that subscribe button if you want. And I will see you guys again next week.